Now, in my opening remarks yesterday, today, we've talked about the importance of technology and the future of innovation. But this is the panel that's going to get it done and give you a perspective about what's possible, what's happening, what the future looks like. It's very exciting. We're talking about the common domain model, but we know that there's so much more that can and will be done in the marketplace. So this first panel this morning will explore the opportunities there. We have a panel later in our breakout session that will talk about the common domain application. So we'll tie those things together, and at the end of the day, you're gonna have a complete picture. So we're honored to have Rana Yared, Goldman Sachs board member for ISDA, moderating the panel. Rana, all yours.
So as Scott said, we will focus on new technologies today. And generally in the hype of the moment, new technologies and the reapplication of old technologies to new problems seem revolutionary, though they may not be. We have assembled today a distinguished panel to help us sift through what will amount to hype for the financial industry and what will change the fundamental ways in which we run our business. Moreover, I'm very proud to say that we have met the challenge that Scott has put to us, which is to assemble an entire panel of female technology and finance leaders. So I will ask the panelists to focus today on the following topics: the power of the movement to cloud, unlocking the value of data, the use of artificial intelligence and machine learning, and distributed ledger technology. So not a lot to cover in the 50 minutes that we've got. So I'd like to start with Lynn. Financial services has always generated a bounty of data, but the movement to the cloud and the introduction of more powerful analytic tools has the potential to enhance the ways in which all participants, both individuals and the largest asset managers, interact with data. What are the trends that you see, and how is ICE capitalizing on those trends?
Thanks, Rana. Good morning, everyone. I think it's probably best to first just describe the way we at ICE think of the company. You know, we've always thought of ourselves as being in the technology and data business. The reason being is, as Jeff likes to describe it, we're really good at taking markets that are quote unquote analog and moving them to more digital. Meaning we're very good at taking markets that have an opaque structure and moving it to a transparent structure. Clearly, as a result of doing that, data is both an incredibly important output and also an incredibly important input into fostering that virtuous cycle of liquidity that really drives financial markets. The business that I run, ICE Data Services, now represents about half of ICE Group's revenue, actually. It's a business that, on an increasing basis, is not just relying on the outputs from the 12 global exchanges that we're running, but also providing tools such as analytics to really drive activity, not just on our own exchanges, but on exchanges around the globe. I think the most interesting thing that we're seeing is really the modernization of the trader. There's clearly a lot of automation going on, to the extent that you even have retail investors that are consuming analytics on demand. But there's also important trends in the financial markets ecosystem that are driving the digitalization of markets. A great example of that is indexation and passive investing, which in my mind is a very data-driven trend. But also, it's not just about the content. Another area that we've seen a lot of success is really driving the transport layer, the transport mechanism for that data. In 2013, as many of you know, ICE acquired a business called the New York Stock Exchange. I'm sure no one's ever heard of the New York Stock Exchange. But along with it came a network called Safety. At the time, it was really just focused on providing a reliable transport mechanism to the exchanges that the New York Stock Exchange Group ran. We've significantly increased the presence of that network. We've expanded it into Asia, so it now covers all of the different geographical regions. But most importantly, it's got a whole level of cybersecurity and resiliency that folks demand in transacting in the increasingly digital world.
Thank you. Thank you, Lynn. Jennifer, like ICE, the DTCC is innovating from an incumbent's position, well-known and very much entrenched in the market. Of the many businesses that you operate, a lot of them benefit from the network effect. How do you see the DTCC using the tools that are currently being put forward by new companies and new technologies to innovate in financial markets? And what opportunities do you think that you all have to improve not only data, but also the workflow, so that per Lynn's point, the input is as good as the output that we ideally want?
Thanks, Rana. So, for decades, DTCC has been developing solutions for the industry, driving change to address industry challenges or needs. But the underlying theme there has been about market integrity, safety, and soundness. Being at the forefront of innovation and leveraging our core strengths, such as mitigating risk, creating market efficiencies, and reducing costs for the industry is able to really benefit from those network effects on those solutions. But what's happened over the last 10 years is this development of such a broad spectrum of financial technology that creates this new giant toolbox for us to use in developing and redesigning workflows. So how do you make sense of it all? I think we start with a question, which is, what does innovation mean? And if I asked 10 people in this room today what innovation meant to them, I'd probably get 10 slightly different answers. For us, innovation is modernization and change. And I think those are two really important words, because when you think about creating new business opportunities that combine client insights and needs and challenges, technology innovations, as well as your own organization's core capabilities and strengths, it's the intersection of those three data points where the opportunities that drive true client value actually emerge. And I mention this because one of those data points, as I mentioned, is technology innovation. Technology is that enabler. It's a means to deliver client value. So our clients don't come to us and say, could you deploy a blockchain solution for me? They come to us and say, we're looking for well-integrated, connected platforms or solutions that help them do their jobs faster, better, enable them to make well-informed decisions from large data sets and reduce their cost. Today, our industry has been using technology to automate and improve processes for decades, but what's happened now is we're moving away from just using technology to band-aid a solution and leveraging the advancements in technology now to actually redefine how counterparties interact with one another. Consider doing different things, right? So using this giant toolbox of technology innovations to improve productivity, enable new types of interactions between each other, and deliver those cost efficiencies. So what tools are most relevant? Well, there's a broad spectrum, as I mentioned, and it can go anything from quantum, cognitive computing, AI, which is a large umbrella that fits a number of different types of algorithms, et cetera, underneath it. You've got big data, you have blockchain, you have cybersecurity, cloud. There's a huge spectrum here. So which ones are actually most relevant to our industry? I think it's anything that helps us design and develop new and novel workflow approaches. And it's not going to be just one of those tools, it's a combination of them. So I'm going to focus on cloud and AI to start with, because those are two technologies that offer tangible opportunities for the industry now. And it's worth mentioning that there were two industry surveys done earlier this year in which it was reported that AI, again, a large umbrella, but AI was a top priority for not only the buy side, but the sell side as well in 2018. And so I think let's talk about cloud and then AI. If you start with cloud and you think about how the ecosystem of cloud has evolved over the last several years, the industry has gone from skepticism to experimentation and now into a phase where there's we see the potential in really driving many of our applications to the cloud. DTCC itself has been using cloud for the last 5 years, and we're continuing over the next 3 to 5 years to migrate applications and solutions to cloud technology. Cloud can give us scale, increased agility. I think one of the most important things is it's a step towards more effective innovation capabilities. So again, it's a technology that for us, and we believe for the industry, creates a foundation. And now that you've got this foundation, if you take something like AI, which again, I'll break this down. If we break it down into robotics and automation, as well as advanced AI and machine learning. RPA automation, very simple, right? You're executing tasks in operations, but it gives you that ongoing efficiencies in your processing. It's rules-based, so it's fit for purpose where you need compliance and very accurate, where accuracy is needed or critical. And examples of where you can use that: client onboarding, reference data, updates, post-trade processing, et cetera. In recent discussions with clients, however, when they look at this technology, they think, well, on its own, on its standalone basis, it may not be really bringing the value that they were looking for. So how do you then extract additional value out of it? Well, you combine it with something that's a little bit more sophisticated. So now you combine it with something like advanced AI, machine learning, and now you can take advanced AI to create structured data out of large data sets that are unstructured today. You can send that data to an RPA tool to actually process the data, and then you can actually connect it back to another algorithm on the back end so that it can actually give you some data-driven insights on what you're looking at. So I think that, again, I'm going back to that combination of these different technologies can really help drive client value for the industry. And then lastly, I'm just going to very briefly touch upon blockchain, because I know there'll be additional discussions here today, but ultimately blockchain, again, is something that we believe is a longer term play for the industry, but has some true potential to offer transformational change in how we actually interact with each other, share data, and process post-trade, or have effective post-trade processing on the back of it. So I think, just really considering that when you want to capitalize on some of these technology innovations, maximize your client value by really looking at the different combinations of these technologies and what you can get out of them.
Thank you, Jennifer. If you don't mind, I'm going to follow up. You referred to all the technologies about which you spoke as enablers, not actually problems that are being solved in themselves. So if you don't mind, what are the biggest problems that clients are asking you all to solve? And then what do you think is the technology that most addresses that number one problem?
So great question. And the one technology that I left out was APIs. And I think that's probably one of the most popular technology innovations right now. It gets very little press, but having, again, that connectivity and streamlining processes from the fragmented market that we have today, being able to extract data from multiple different applications is probably the number one request that we get.
Yeah, I would actually agree with that. I mean, a lot of the success that we've had is actually bringing together disparate data sets, not just your traditional data sets that tend to add transparency to markets, through a common either network connection or a common API. Folks don't want to do the brain damage of trying to integrate multiple data sets, particularly disparate data sets, and the more innovative data sets like alternative data and things of that nature. They'd rather take it from a trusted provider, someone who's done the brain damage to really bring about some reliable, secure method of delivery. It's why we've made significant expansions into the content sets that come through our network to not just be focused on either our exchanges or even traditional exchanges. We've got an increasing amount of alternative data that flows through it, and also fundamental data that flows through our APIs and our network.
Thank you. So you've both spoken now about the importance of straight-through processing and automation for our more institutional clients, but we have not really spoken about how individual clients are benefiting from any of these trends. And so having touched on data and collaborations for institutional participants, I want to turn to Mary Catherine, who joins us from BlackRock's digital wealth business, which, as you all know, is inherently a personal, individually driven undertaking. So the question is, how can individuals benefit from the innovations that are accruing to large institutions, and what learnings has BlackRock taken from their traditional business into their digital wealth management business?
Thanks, Rana. So it's been a theme that each of us has mentioned, that the businesses we're lucky to work in have been technology businesses, data businesses for decades. That's certainly true of BlackRock as well, and many of you in the room are likely Aladdin clients and know that for a while we've had an operating system for institutional money management and portfolio management. So what's really changed, and we've sort of heard this, is the possibilities, what we can do with technology today, and also really the expectations. And I think what's interesting about wealth management and why we've been focusing at BlackRock on our digital wealth business is that younger investors and investors, as we all experience the sort of user delight of Uber and how quickly we can now get in a cab, or how quickly you can buy plane tickets, the money management experience hasn't changed as quickly. Or those who have been changing it are smaller, aren't as trusted, and perhaps don't have some of the institutional quality processes or backing of traditional money managers. And so a couple years ago, we acquired a digital advice company, a robo-advisor called Future Advisor. We also built a number of applications and products in-house, one called iRetire, and about a third of financial advisors in the United States now have access to our portfolio of products. We also have a presence in Europe with a digital advice provider called Scalable. So what have we learned? In the institutional context, you don't have a lot of options. If you don't like the technology you're interacting with, you have a limited set of choices. In the wealth context, that's not the case. So I think it's been fascinating and really critical for us as an institution to be operating in this environment where the bar has just been raised that much higher in terms of user experience, simplicity, clarity of how you're communicating with an end investor. But certainly the benefit for the end investor is bringing down fees as much as by 75%, depending on the context, passing through the lower cost through back office digitization. More than almost anything else, we're finding that our clients are coming to us and looking to us to be a partner in digitization broadly. And similarly, they see wealth as kind of like a vanguard and a first stop in that journey to change the client onboarding, to change some of their back office processes. And so those are two of the major areas, and really just bringing down the barrier. If you have to have $500,000 or so to be willing to interact with a financial advisor in today's context, what technology is allowing us to do is to scale that. And roughly 2/3 of our institutional assets are already retirement assets. So if we can bring that mission and that purpose of building better financial futures to people through our partners in wealth management, that's what we're focused on. I'd say just the last sort of critical learning, I think, or two more if I can. One is getting people to use your technology when they don't have to is really, really hard and is not a core competency of financial institutions by and large. And so having to invest in that, focus on that, understand in really minute detail, when you put this button here or there, how does it change someone's willingness to work with you and be your client has been a critical learning. And the last piece is what Jennifer mentioned, that defining the problem is critical. We also have, we launched our blockchain lab a couple of years ago. We launched an AI lab in Palo Alto in partnership with some Stanford professors early this year. And the key thing is for us to be defining what problems do we really want to be solving, and to do that also educating our entire workforce and our leadership around in what ways is technology magic, and in what ways is it really not magic. And that some of these problems are still extremely challenging, and that the biggest barriers may lie in like data quality or changing behavior.
Thank you. So all of you, Lynn, Jennifer, and Mary Catherine, have spoken about the benefits that have accrued to our industry from improved data analytics and from collaboration. So we've asked Ashley here as an unconventional rep to the ISDA AGM because these advancements have given a rise to also safeguard our data. So always with full disclosure, Versive is a Goldman Sachs portfolio company. However, that notwithstanding, Ashley, can you educate the financial services community gathered here a little bit about the dangers and challenges that we face and what we can do to safeguard our data as both consumers, clients, and banks? And also, what do you think are the major advancements in cybersecurity of which we should all be aware?
Yeah, that's a really important question, especially for financial services, obviously. So from my perspective, there's two really important dimensions to this question. On the one hand, we're moving in cybersecurity because of complexity of networks from it being a human scale problem to being a machine scale problem. And that has a lot of implications in terms of the technology we use, in terms of how we support the people trying to keep our data secure. And then on the other hand, how do we respond to this from a cybersecurity industry perspective? So we're seeing, a complementary shift in cybersecurity in terms of moving from a more traditional patchwork model of security towards a holistic integrated approach. And so I think those are the two really important things to cover. On the network scale, so at Versive, we talk about it in terms of a phase change that's happening right now in cybersecurity. So traditionally, we thought of networks as things with insides and outsides, and we were very careful to just protect the outsides of our networks and make, whatever happened inside, it was a little bit less important. And we've seen with, cloud, as we were talking about earlier, with Internet of Things and bringing new devices, this concept of bringing your personal devices into the network, bringing them in, having them go out again, having a lot of new applications that we use in the cloud that are third-party applications that lots of different companies use, that changes the dynamic of corporate networks a lot. So things have they're changing much more quickly and much more dynamically. And the really important thing that gives us, our networks are becoming more ecological than castle-like, and that's a really important thing. And the other aspect of it is that the adversaries, like the hackers and other people who are trying to get into networks, they have access to this same technology also. And so that gives an additional dimension of complexity where if you have a hacker, for example, who can use cloud technology infrastructure to launch attacks, and they can also get on the dark web hacker tools that have been developed by nation states. So they've been able to really punch above their weight in recent years, and we've really seen the impact of this. So in 2017, we had more data breaches, I believe, than in any previous year. And some research we've been doing internally shows that the overall cost of cybercrime has actually just surpassed the cost of natural disasters. And then on the other hand, we have corporate defenders who are sitting there, receiving hundreds to thousands of alerts every day, and we find that they can really only get to about 20% or so of the alerts that they actually are receiving. So they're just, it's not a human scale problem anymore. We have to support the human analysts with technology. It's absolutely critical that we do that. So that brings us back to the second point of what is the cybersecurity industry doing about this? Obviously, we're doing, we're putting a ton of money and time, and a lot of people are thinking about this, trying to figure out, how do we actually make this shift in technology to defend in the context of this phase change that we're undergoing. So from my perspective, the really important thing is to shift from a traditional patchwork style model of cybersecurity towards something that's more integrated and holistic. So like I was saying earlier, traditionally, people have been thinking about networks as castles, and we've focused a lot of attention on the perimeter, keep it really thick, keep it really safe, make sure that nobody gets in. And then over the last decade, as we've been realizing people are getting in, we can't really keep them out, then add different siloed tools around to try to solve additional problems, right? So ransomware, build a tool for that, have a tool for malware, have a tool for, to monitor and detect specific kinds of attacks that might come into the network, right? And each one of these tools that you have generates more alerts for the security team to have to deal with. And these alerts are not contextualized. So your daily life as a security analyst, you get lists, screens and screens of stuff that you just have to go deal with, and it doesn't tell you why you have to deal with it. It doesn't tell you what it means. So that's where machine learning and AI and integrating technology really comes into play. If you can actually, instead of trying to patch things together where things are going to fall through the cracks and you can't understand what anything means, if you can instead go to the underlying layer of data and actually use machine learning to actually understand what is going on in the network holistically in the context of what an adversary or hacker has to do to be successful, right? So they have to go into the network, they have to look around for data, they have to bring the data together, they have to take it out of the network, right? So if you start to look at it holistically across the network and then frame it in terms of, what does that data mean for an analyst? Why should they actually care about this? Then instead of giving them hundreds of to-do items, you can give them stories. You can say, okay, we think this happened, here are the pieces of evidence that we have to support it, and this is why, this is what we think you should do to go remediate. So obviously there's a long way to go before we're going to be really, really good at that. The technology's in general across the industry in a pretty early phase of development, but I think that shift from thinking about it as a traditional keep people out of a closed network to an ecology that we have to be monitoring dynamically with technology and helping our analysts actually understand. I think that's a really important shift.
As you think about financial services and the way that we deal with our cybersecurity threats, what are you seeing as either the top error that we are making or the most commonly posited false hypothesis about how we deal with our own cyber?
Yeah, that's a good question. I think that mental shift in security organizations isn't taking place that quickly. So we had one, it was a financial customer recently who, in our particular case, they said, well, where are all the additional alerts? I'm expecting to see hundreds of things. Why are you not giving me hundreds of things? And doing that reframing where people are actually expecting to be supported by the technology with intuition is a really hard mental leap to make. And, obviously the technology, nobody's technology, and this isn't just our company, like in general, nobody's technology is totally there in terms of being able to give you things that are 100% accurate, that you can just, listen to it and do exactly what it says. So I think learning how to work with the technology and understand its limitations and then understand intuitively what it's telling you and try to take it holistically, I think that's a really important shift that needs to happen.
Thanks, Ashley. So, few topics scream cyber security and the need for better cyber security than cryptocurrencies and the use of the blockchain or distributed ledgers. And so always being mindful that when we speak about the crypto landscape, we try to differentiate, at least at GS, between the currencies, the blockchain, and then more generally distributed ledger technologies. And the reason why we do that is because the future path of each of these three items may in fact be different and potentially unrelated. In many cases, distributed ledger technology is not necessarily reinventing the wheel, but rather its centrality in our minds is giving rise to new creativity in solving old problems. So I'd like to turn, obviously, to Blythe on this question. Where do you see the greatest potential with respect to the applicability of distributed ledger technology away from digital currencies specifically? And do we need DLT solutions to achieve that potential? Or are there cases where a centralized data can do the job just as well?
Thanks, Rana. I think what's perhaps not often pointed out is that what is most interesting about the technology environment that you've just heard described by all of the panelists here is not necessarily any one of these themes, but the fact that they are happening together. And on the one hand, that often feels overwhelming and challenging, but it's really all being driven by some common drivers. Radical reductions in the cost of storage, radical reductions in the effective costs of computing resources, which enable us to do things with big data cognitively and otherwise that we've not been able to do. It's in that context, I think, that distributed ledger technology needs to be thought about rather than necessarily in isolation. With every one of these topics that we've been talking about, whether it's machine learning, artificial intelligence, big data, the use of APIs to interact, cyber defenses, intelligent cyber defenses, you have one very basic common problem. And that is if you put garbage in at the beginning of the process, you get, at a minimum, garbage out, and sometimes garbage multiplied exponentially. And one of the great challenges, at least in financial services, actually a broader challenge, but given the audience, let's stick to financial services, is that in many of the activities that we undertake, the nature of the ecosystem that we exist in is that there are multiple distinct independent entities, each with their own respective fiduciary responsibilities to their shareholders or their customers or both, who have to concur on some basic facts about financial activity and resultant data. And the way the world has worked traditionally is that because you cannot responsibly simply rely on a trusted third party to tell you the facts about your books and records or your customers' positions or anything else relating to data recording value, people have kept their independent records in siloed traditional database infrastructures and then spent, which is prudent and in the old world certainly more secure than the alternative, which is just trusting someone centrally. And then they've had to spend hours and days and headcounts and billions on clearing up the resulting mess, which is very often as simple as a process of zero value added, ticking and tying, reconciling of divergent records of what should be the same piece of information. So what is DLT all about? It's about a way in a secure environment, in a cyber-resistant environment, enabling independent entities to share common records. That doesn't mean sharing all their information with each other just indiscriminately, but having the confidence independently to be able to validate and verify mathematically that the record that they're looking at is consistent with the record of every other party to that contract that has a need and or a right to know. And to do that in a secure fashion that doesn't involve breaches of confidentiality, or worse still, introducing new risks by sharing everyone's data with everyone else. I think when many people think about blockchain technology, they imagine the original Bitcoin blockchain construct, which is a construct where all of the information on that ledger is shared with anyone and everyone. That is not obviously a great solution to highly sensitive, large dollar value financial market flows. Apart from being just commercially unwise, it's also outright illegal in most jurisdictions. But the beauty of DLT solutions now is that they enable independent parties to agree on records of the truth without necessarily sharing that information, and to do that in a secure fashion that they can be confident of that. And that has the potential to be applied to any number of financial processes. I'll highlight post-trade in particular. It's where some of the biggest messes and the biggest elements of cost arise, and where there are so many independent parties that have to agree on the facts in order for things to progress forward. If you can create a financial ecosystem that's based on technology platforms that enable the secure sharing of data, what you unleash is the kind of web-based innovation that we've seen outside the financial services space, which led to the giants of the platforms of Google and Facebook and Amazon and others. It's extraordinary when you think about it, how sophisticated financial markets are, and yet the absence of correspondingly valuable platform companies and ecosystems where the value is derived from those entities that conduct their activity on those platforms. That's what distributed ledger technology is ultimately going to enable in financial services, and that will drive machine learning and cognitive computing, artificial intelligence, any number of algorithms, straight-through processing, big data processing, because it will help smooth the process by which record-keeping is arrived at by independent entities.
This being the ISDA AGM, there's a particular interest to understand the normalization of data and trade representation broadly. The ISDA Common Domain Model Initiative seeks to address these. In that context, it would be helpful to the group to understand the role that smart contracts may play in both transforming the way that we trade and the documentation that underpins the ecosystem. There are both proponents and detractors of smart contracts. Some people will tell you they're critical, others will tell you they're really not that smart. So to that end, where should ISDA focus its membership, if at all, with respect to smart contracts?
Well, first of all, let's start with, what are smart contracts? And I think many people get confused at that sort of that threshold entry point. Really, what you can think of a smart contract as being is just a piece of executable code. That doesn't sound very new. We've had that around forever. That defines a workflow between independent entities on a ledger that is distributed. It's the fact that you have independent entities needing to rely on that executable code rather than keeping it locally to themselves that differentiates smart contracts. And that is what introduces the very real possibility that the resulting contracts may not be quite as smart as originally intended. The challenge is that if any of you has ever tried to produce a piece of code to program, and I'm not a technologist, but anyone even trying to create a macro in a spreadsheet knows that this is hard. You know how easy it is to introduce errors in programming. And if we're going to turn over progressively more of our destinies to computers, we need to be very careful about that potential source of risk. And the thing is that not all programming languages are created equal. There's a whole family of programming languages which are, what are loosely called general purpose languages, and the advantage of them is they allow you to model essentially any eventuality. The disadvantage of them is that they potentially expose you to any eventuality. So when we're talking about shared executed code, so automation across multiple entities in a market ecosystem, you have to think very carefully about renowned in this space referred to smart contract programming as programming with razor blades at a panel I was listening to recently, which was, a nicely visual expression of the point that I'm trying to make. It is very important that smart contract language tools are intentionally constrained to prevent the kind of accidents that edge cases in computer code bring about. So domain-specific functional programming languages that are intentionally designed for use in this space, that produce a finite array of outcomes that the parties using them are able to predict with certainty, not just probability, is an absolutely vital feature of any contract that you're going to be relying on, at least at an enterprise scale in a large-scale financial market. In terms of ISDA's specific area of focus, I think they're doing exactly what we would hope and expect an organization like ISDA that has been centrally responsible for organizing and assisting with innovation in this space for decades now. And that is recognizing that in the derivative space, there is a need for standardization and common understanding of what we mean by the components of a derivative contract as we digitize that. That work, which is embodied in the Common Domain Model, CDM, actually I believe there's a panel about that later on, is extremely valuable because it means that everyone approaching smart contracting tools on distributed ledgers will not have to reinvent the way in which we define the key attributes of a derivatives contract all the way through its life cycle until its maturity every time you undertake that programming exercise. And that takes one large area of potential uncertainty and error and disagreement off the table if that's done right. So kudos to ISDA, I think, for focusing on exactly the right area.
And I think an additional point to make here is anyone who's looked at blockchain in our industry and has thought about use cases and tried to explored the use of them, as you start to operationalize and really get into this technology, the number one thing you need to start with is standards, right? Standards around data models, standards around protocols. And so something like, the industry rallying or supporting ISDA's work on Common Domain Model is really important because it can certainly help to progress the actual adoption of this technology across our industry, which would be a fantastic outcome.
Thank you both for your comments on that, and I'll repeat the disclaimer I made when Ashley was speaking. Goldman Sachs is a shareholder of Digital Asset Holdings as well.
I was going to complain if you didn't mention that, by the way. Thank you.
No problem. I'm glad that I made it there then. So I'll close with the hot topic, and I would be remiss not to ask a crypto-related question on a panel about innovation. And Lynn, as the representative of the only major exchange, the hot potato falls to you. What is the trading path that you see for cryptocurrencies? And will there be a day in the medium term where cryptocurrencies are taken as collateral by a clearinghouse? As a former manager of one, uniquely positioned to answer that question.
Right. It is the hottest topic out there at the moment. I feel like if I stood on a street corner with a sign that said crypto, I'd get a queue of people wanting to talk to me. It's a little bizarre. So I'll come back to your question specifically in a bit, Rana, mainly because I think those type of questions and the philosophy we've had at ICE is very much putting the cart before the horse. The temptation clearly is there as an operator of exchanges and an operator of clearinghouses to be the first to launch a crypto-based product because, again, it's the hottest topic out there. But at ICE, we've taken a slightly different approach, which we believe is a more thoughtful approach. And you see this market, it's not transparent, it's very fragmented. There are more than 500 exchanges out there. There are more than 3,500 individual currencies out there. So it's more, where do you start? And from our perspective, that comes down to what really makes markets successful. Well, what makes markets successful is, from our perspective, is are they transparent? Because transparency begets liquidity from our perspective. And do they lend themselves to become effective risk management tools? The current framework that exists today, I would venture to say, doesn't. I think this is a market structure that is in desperate need of a definition of guardrails around it. be it from a regulatory perspective or just from a reliability and scalability perspective. The approach that we've elected to take is really thinking about the transparency angle and how we can add transparency to this market. So we've just recently launched a cross-exchange cryptocurrency feed, which has more than 65% of the traded market as I speak to you today, through a variety of exclusive partnerships that we've done. One in particular with a company called Blockstream based on the West Coast, which is an aggregator of cryptocurrency feeds. We're doing a variety of enhancements to that feed, so that will be better than 90% of all cryptocurrencies traded on the market. Through that feed, through the reliable, scalable infrastructure, cybersecure infrastructure, talking about the elements we've all talked about today, folks will be able to consume information as to what is the cryptocurrency's true value, not just looking at a single exchange, not worrying about if the exchange that I connected to has just been hacked by someone. So we're really excited to roll this out to the market, both on a level 1 basis, which is just bids and offers, but we're even more excited because as a result of this feed, we're going to develop things such as ICE Data Services closing price of each of the individual currencies, which in our mind is going to start to add transparency to the market. To get back to your original questions, Rana, from a clearinghouse perspective, my previous life, as Rana indicated, I ran a clearinghouse, ran a couple of clearinghouses actually, and we tend to take as collateral at ICE the most reliable forms of collateral. That's government debt and cash is really our acceptable forms of collateral at our clearinghouses. So I think we are a very long ways away from accepting this as a reliable form of collateral because it doesn't have the structural, reliable, secure framework around it.
Thank you, Lynn. So with the last 10 minutes left, I want to open up to the audience to ask questions to our panel. There are 2 ways you can do this. One is the app, and your question will pop up on my screen. If that feels too technologically onerous, I appreciate this is a panel about tech. Raise your hand and shout it out, and we will address it that way. Or put your hand up that you're typing so we know not to wrap up without you. I'm going to take the lack of hands up and the lack of pop-ups to mean that all of the relevant topics have been addressed, that the panel has done a fantastic job, and that we're all going to thank them for being up here in that case.